So what's good, YouTube? It's your boy Azaka FX. As you can see, this is a $21.65 account, and I actually intend on taking this trade to as much as I can take this trade. So if you've not subscribed, definitely subscribe so you can see through how this journey is going to be throughout the whole of this journey, and exactly what we are looking to do in this particular trade, how we are going to take this trade, and everything that has to come forth for it. But before any of that, let's go ahead and give a lovely full margin right here, and there we go. We have fully full margin this account. If you see, nothing is going to work. Nothing is going to work in this account. And then we are actually looking to target a very decent amount of pips in this particular trade. So if you have any question, leave it in the comment section. Let's see how this trade plays out. Before I explain the technical criteria of how this trade play out, I'll be giving you guys a sneak peek as to the results of this trade. Then we can now settle down and explain the technical criteria of this trade. Here is the special part of what I'm actually going to do in this trade. This is a beautiful trade. This is the special part. I'm actually going to add entries, which is that, to this particular trade, because I know fully well that when we will hit TP off from this particular trade, if I take a little bit more than 4 more entries, this account will be at risk. But 4 more entries, because we have 4 on the bottom, 4 on the top, so we've maxed out our margin level on a 50-50 scale right about now. I will explain the technical criteria of this trade, but before then, let us here we got 400 pips, or close to 400 pips at least. This is a lovely one. This is 380 pips from our initial entry. I'm going to close my trade, then switch to trading view so that I can really explain how we caught this trade. Now, there are actually 3 reasons of which we were able to catch this trade, and I'm going to explain it in this zone right about now. The first reason we needed to know was that we needed to determine price bias, and to determine price bias, first and foremost, we needed to know where the liquidity line is. How do we do that? Let's go straight up to the daily time frame for that particular business. Now, to determine the bias for the day, you need to find the high and the low of the daily previous candle. So to determine the bias for today's trade, you actually need 2 single themes. One of them is very important, which is bias for the day. How then do you determine bias? You need to find liquidity zone. Then you need to wait for that liquidity zone to be swept, and to do that, you simply need to determine the high and the low of the previous daily candle. Then you need to see if price would actually sweep either the high of the low of the previous daily candle, or price will give you a BOS in the high of the low of the previous daily candle. Now it actually sounds like I'm repeating myself, but I'm not. So let me show you what I'm talking about. So this right here is the previous daily candle. This right here is the previous daily candle, and can you see this wick right here, right about this spot right here? This is the low of the previous daily candle, and all the way up here is the high of the previous daily candle. And then we needed to see if price will close like this one actually closed below it. This closed below it, so the next time we needed to look for a trade, we could have taken a sell. But right about here, it did not. It actually gave us that liquidity strip. You see this tiny wick that actually dropped down, then pulled back into the zone, pulled back up into the zone. If before the end of today, then price successfully give us a close below, that means the bias for tomorrow is still going to remain a sell, because a close below is a BOS, not a liquidity sweep. But as of right now, as of the time I was executing this trade, price actually gave us a liquidity sweep for a buy entry. Now after that was said and done, the next thing we needed was a simple look for a simple supply and demand zone in the 1 hour time frame. So like now in the 1 hour time frame, we needed to see some sort of supply and demand zone. That is this tiny line that I actually marked out right about here. I don't know if you can see it, very tiny line my analysis have tend to gotten a lot neater. Usually I would have used a rectangle, but that tiny line, I actually found that tiny line from the 5 minutes time frame, which is what we did. This is it right here. By the time we jump down to the 5 minutes time frame, then you will see it clearer. But then you'll be asking me, where is the liquidity, the supply and demand zone? Which form is the supply and demand zone in? The supply and demand zone was actually in form of what? An order block. But for it to be valid, we needed to see what? A break of structure, hence using the one from the lower time frame. Otherwise, the order block originated from what? This zone right about here. So let me move that so you see the order block I'm talking about very well. So that zone, this zone right about here, is our order block. Can you see it? That was our order block, and the mitigation of that block happened with the next week close to it right there. So that is the mitigation of that block. That is what actually gave us the mind that yes, this is actually going to be a buy trade. That is the second part of our analysis, structural alignment. The first part of our analysis is what? Determining bias by looking for what? Liquidity sweep on daily time frame, either for the high or the low. And then the third part of our analysis is entry criteria, and to actually do that we need to go down to the what? 5 minutes time frame to get into our entry criteria, how we're able to catch that perfect lovely entry so that you will not whipsaw your account before the move even starts. For our entry criteria, we needed to see what? Internal liquidity actually being swept on the lower time frame, like the 5 minutes time frame. So we needed to see price accumulate internal liquidity, then we needed to see price take off that internal liquidity in form of this zone right about here, informing this zone right about here. So this was our internal liquidity. I just marked it out, and then this zone right there, and then our lower time frame entry actually came in form of the last point of supply, which is this particular candle right there. So basically the last open fair value gap, no matter how small it is, the last open fair value gap, it is actually clearer if you go down to the 1 minute time frame. But I first spotted it in the 5 minutes time frame because of what? Experience. Before I jumped down to the 1 minute time frame, and as you can see, the last fair value gap before the move up is actually right here. See it? This candle right there. That particular candle right, go down to the lower time frame so you would even see it better. That particular candle right right there, that was our last form of supply, our LPSY, and that was simply how we cut the trade. Of course, our entry was not perfect because I missed it. I almost missed it. Then I had to what? Jump in nonetheless, because the move is a good 400 pips move. Now there is more. And if you want to actually see more, stay tuned, stick to the watch to the end of this video. Let's see how it's actually going to play out. You might be saying, how is it going to play out? You've closed your trade. Let me explain. Now, next up, we got a lovely buy displacement candle. So lovely buy displacement candle means yes, the decision for price to go up is still in play, which is this buy displacement candle right here, and we can simply wait for price. That was why I actually had to close my entry. We can simply wait for price to come back into our buy displacement POI, which is right here. Of course, we'll be refining that zone using the 5 minutes time frame. Let me refine it. You go straight to the 5 minutes time frame and look for also the last point of supply, which is the same thing we saw in the morning but on the 1 minute time frame right here in the 5 minutes time frame. And when price come here, we simply take on another buy again, and this time hold that buy to hold that buy all the way up our initial target. That is if price comes down to our entry before price actually hit take profit. After our first trade, we're actually waiting for price to come back down, all the way down, say here. But price never did that. Instead, what price did is give us a fresh sweep, a fresh zone to buy off from, and we are going to, because $30,000 is a very, 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 very long place. So we're going to take on our $200 full margin for right here, and wow, watch it go. Beautiful, beautiful, beautiful entry. And then we will try and hold that. We will try and hold this, at least, let's say, nothing too crazy. Let's just hold it to our next supply and demand zone, which can be found a little bit up. Let's go on to our left. Next supply and demand zone, which can be found a little bit up here, which is about 170 pips. Not much move at all. Not much move at all. That is it. That is it. At least after this particular catch, we will now say yes, we can end part 1 of this video in peace, and before tomorrow we will roll out part 2. So definitely stick to the end, subscribe so that you can see part 2. Let's go, ladies and gentlemen. This is a very, very, very beautiful scenario. Very, very, very beautiful scenario. And bullseye, ladies and gentlemen. Let's go and close our trades, and we are done, ladies and gentlemen. See you in the next video, ladies and gentlemen.